97.5% of traders are still doing top-down analysis the wrong way. But today I will reveal every hidden detail step by step so that you can master it too. I will teach you what's hidden behind each time frame from high to lower time frames, what price action strategies to apply and how to accurately take top-down analysis winning trades. Let's get started. Top-down analysis is an approach that empowers traders to make the right trading decisions by considering multiple angles of the market, such as multiple time frames, price action strategies, and market structure. You do this by analyzing the market from the higher time frames all the way down to the lower time frames, which are your trading time frames, and you do this while applying price action and market structure strategies. Let me break down each time frame in detail, starting with weekly time frame. So in weekly time frame, we check for a few things. We check for overall market trend direction or state, which means that we check if the market is number one, ranging, and number two, trending either up or down. For example, when we look at the historic data here, the trend is going down. Then based on this recent data, the trend is going up. Then we can conclude that the trend that we see is suggesting a ranging market state. By the way, for weekly time frame, always focus on the current view of the screen that you can see, which is minimized to the normal size. Then after identifying the market state, then we look at the immediate trend direction. Let me show you what I mean. If we look at this recent part of the chart, it is our immediate trend direction, which is an uptrend. Immediate trend direction is pretty much the short-term trend direction that is recent enough within the few weeks in the case of weekly time frame. Then for the daily time frame, it will be within few past days or recent tradable days. Then now we need to draw weekly strong key levels based on the view that we see on our screen. Key levels are the areas in the chart where there were strong reactions of the price. For example, this strong takeoff that you see on this swing right here happened because of the strong price reaction. And the stronger this takeoff, the stronger the key level. So what does this mean? This means that the price area where this takeoff started from is the key level. This is basically where your actual key level will be at. This is where you should expect the price reaction in the future. So our first strong key level will be here. And all our weekly key level lines are going to be green in color going forward. This is so that when we go down to a smaller time frames, we know which lines are which, because each time frame will have its own color. And the second key level will be here, and the third key level will be here. Let's quickly recap as to why we drew our key level lines to where they are. For example, the first key level, we drew it because of this takeoff here. Then as you can see in future, it did hold in that area or in that price area. And the second key level, we drew it because of this takeoff here. And as you can see, the takeoff did hold when the price came back to that same area. And it held on multiple areas. And there was another strong push, which created another key level on top of the same area with the original key level. And the same thing happened here and here also, which made this key level even stronger because there's multiple price reaction in that same area. And the last key level was because of this takeoff here. And as you can see, it went through it the first time, and the second time it did hold. Now that we know the trend direction of our weekly time frame together with the immediate trend direction and have drawn our weekly key levels, now let's go down to a daily time frame. So the daily time frame view is exactly the immediate trend direction view of weekly time frame, which is an uptrend. And we can also see the weekly time frame key levels on the daily, which we need to keep on the chart because they will help us remember the important levels. So the daily time frame is for confirming a few important things at a microscopic level. Things that will help us get trade opportunities because we can't trade based on weekly time frame analysis. Our trades would take forever to materialize. The first thing that we need to look for is the immediate trend direction of a daily time frame, which is this part of the chart right here. Here we look for the state of the market, whether it's up or downtrend or ranging. and we can see that the market is in a downtrend if we look at this immediate trend direction. Another important thing that we look for is the current market of the daily time frame, which is this last part of the chart, and the state of it is ranging, and also very important, it is in a weekly key level. And then we need to draw daily key levels, starting with this level here at the top and followed by this key level here. Now let's go down to 1 hour time frame to reveal more of the powerful information. So this entire 1 hour time frame chart view that you see is actually the current market of the daily time frame. And 1 hour time frame is for finding trade opportunities within the daily time frame current market chart view, which is a ranging market. Here you will be guided by the key levels that you have drawn on the daily time frame, and these key levels will tell you where your potential trades will start or end. Here the most high probability trades are the ones that are in line with the daily time frame immediate trend direction, while keeping in mind the weekly time frame key levels. For example, if the daily time frame immediate trend direction is down, then that means that you should take the short trades here in 1 hour time frame. That will increase the probability of your trades without you doing anything extra. Also here you draw your 1 hour time frame key level so that you know which areas are going to give your trades some challenges. Then if you do find your potential trades here, then head down to 5 minutes time frame. 5 minutes time frame is very powerful for your trade entries because it will help you get a better view of the trade setup you found in 1 hour time frame, because you get to see the hidden small key details which will help you know if it's the right area and time for you to enter a trade or not. You also see the market struggles here candle by candle, which is powerful, and this will help you have a little bit of a calculated stop loss on your trade. To expand on this topic, check out this powerful video here.